trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, been asked to take a look at the shipping stocks, FedEx and also UPS. As you can see here with FedEx, there's something wrong here, folks. Let me show you why. You see these monster gaps in here? I mean, there's a huge one right here, another one right here, and then a monster one right here. Folks, that means the people that are guessing what those earnings are supposed to be are not guessing very well, because you don't see those kind of patterns very often. You can see there's easy to see the three drive to a top pattern. There's drive one, there's drive two, there's drive three. You can see ABCD patterns all over the place. They line up pretty well if you like ABCDs. You can see it measured to 311. High was 312. So those are the kind of things. But look at this, folks. I mean, you look at this on the weekly basis. You know, we're just going back to looking at those highs, and look at this beautiful three drive pattern. Gee, that's a relatively negative pattern. And you can see the ABCDs on the down. They did a great job of telling you that that was a 78% level right here. So there it is, right on the money at 78%. Now, let's take a look at the wicked stepsister. Get this out of the way. This is the one that's got super big problems today, folks. This is the UPS on a weekly basis. Look at this. It's dropped more in half is what it's done, and it's still going down. You can see just the opposite of FedEx. Now, something is different in here. Today, it gapped down. Well, I don't think you'll be able to see the gap because they do these continuations. Hold on just 1 second. Maybe it'll come up. But data is running okay today. I'm still not I want to apologize to everyone. I'm still not able to send out videos or email by Google. They have literally strapped me to the wall and beaten me with a stick, and I'm doing everything I can. But hopefully it'll be today or tomorrow that I'll have data up and running. But I can't make any promises, and it's not giving me data here right now, which is not a good sign. But let's get back and look at this on the daily basis. You can see here, there's what I wanted to see there. See, there's only one of the shipping stocks is weak. I mean, this is the really weak one. The other one is actually doing relatively well. But look at this. It broke down. Evidently, the earnings were bad and the outlook was bad. I mean, this is not pretty good. Not only that, you're coming into, oh, what a beautiful 135 pattern. Shut the front door and raise the rent, Gabriel. Let's take a look at this one. Boy, then you wonder why I like these patterns. There's ABO, the old 382, or there's your 135 pattern right there. Now let's check with the old ratios to see how we're doing from your high down to your low. And comes within a heartbeat of the 618, which means it's just right on the 786. And well, it misses it by, how much does it miss by? Misses it by $1, which is pretty good. And then, of course, has the big move down. But anyway, that's my opinion of what I see going on. I don't know anything about the trucking business. I know it's part of the transportation index, but I haven't really, I don't really follow that anymore. I don't really follow stocks anymore, folks. That's the end of that. That's the end of that tune. Okay, now let's move over here and get out of the way here for just a second, because we want to see something moving around here with the gold market. Let me get this up here. So we'll take just a second here. This was our forecast for today in the gold market. We've had a high up here. Now remember, this is a smaller time frame, but the patterns are still there, folks. There's your high up in here. There's your low. Okay, the most frequently time for gold to make a bottom is usually between 10 o'clock and 11 o'clock, and there is the bottom at 10:30. And if you look at the ABCD pattern right here, there's AB equals CD, and it measures down to within Oh, well, within a half a dollar, and then it's had a pretty good rally. And so if you were in this at that point, this would have been tough here because you had a nice rally here of about $5. If you put your stop a little too close, you would have been stopped out at break even and missed this. But fortunately, I'm not even involved in this, but I just wanted to give you the heads up. This is the kind of trade we want to be looking for, because what we're expecting now is the follow-up of this ABCD pattern that is right there. And that's what you'll be looking at, is a high around 411. And we're not very far away. Oh, no. Yeah, we are still getting data. This will be, but I do apologize for not sending the stuff out. I really want to. I see things that are interesting, but son of a gun, they don't always work. Now, let's take a look here, follow up to what we were watching here in the soybeans yesterday. If you remember, we were watching the 382. That was the first one right in here. And you can see there was a 382 right there. Okay, now that means that your ABCD on that is going to be right up there. So if you take a look at this, there's your A leg, there's your B leg, C leg, and D leg, and there it is right there. There's your high. Okay, came in right where that profit objection should be. But even early this morning, look, there's another 382 happened here, and look at the other one right here, right behind it, right after the open. There's Tuesday morning open, pulls right back to the 382. Stays here for a half an hour, and then boom, away it went. And what did it do? Da-da, 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 da-da. AB equals CD. Folks, this is why I do short-term trading. I knew this stuff was very powerful, but, when I first started looking at it back in the 70s, that's 1970s, not 1870s, that we didn't have this kind of data. All we had was a ticker tape machine and a Western Union ticker tape. That's all we have. But now you've got this stuff lined up that you can see everything just real easily, and that's why it's so nice. What we should do right now is, because we started something here with this bottom, remember, let's just get this down here, because remember our bottom here was on the weekly, because we looked at that number right here, which is that 106.37. That's what we were waiting for. Okay, that's the ABCD on this. Now we've had a very good rally. So what we want to do now is we want to come up and go to a smaller time frame like this, because this is a pretty good rally. We've come all the way down here from 35. We rallied 50 cents, folks. That's $2,500. So the rule says, watch for the first big 382 retracement. Okay, that's going to come in down here at around another 8 cents lower. So watch that one real closely, because, we've shown you these 382s. Yeah, I know they work part of the time. I see your blacker, Johnny. Sit down. We got to cover this material, my friend. Anyway, I hope you folks realize he's an imaginary friend. I have a lot of those, as a matter of fact. But anyway, that's what we're waiting for, is to see what happens to this next one. Now, to make it real easy, and it never is real easy, what you'd love to see is something like this. This is what you'd like to see that pattern fitting up there just like that. Then you got something. Might take a day or two, but if you're patient, you might get a place to look at that. So let's watch that for sure. All right, the next one we're going to take a look at here is the NASDAQ, because we've had a big run here in the NASDAQ. Sold off a little bit today, but let's look at this on the hourly chart here. We'll get this up here, and there's our hourly chart from the high we made right back here. The NASDAQ today made the 382 retracement to the tick at 2085. That was the high from this level right here. The reason why you should take that high, it took 3 days for that high to be made. There's your to the second, third, fourth, the 4 days to make that high, which also happened to be setting right at a 78% retracement right there. So you know that that's a valid number. So your 382 came in today right at that level. And this is nothing more, in my opinion, of course, nothing more than a 3-day rally. If you look at this on a daily basis, anybody that sees something bullish
Steve
in that,
Rhodes started his
please
trading
tell
career
me,
as a
'cause
student
I
almost
certainly
20
don't.
years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back and we're looking at silver on a half-hour chart. You'll notice the question is that a 3 drive to a bottom pattern? I would say yes, because you have drive 1. You have drive 2, and you have drive 3. Now, the thing that you want to have is you want to make sure that the ABC leg, let's just draw it in here so we can see it. There's your AB leg right here, okay? It goes up, and it goes right up to 78%, as you can see, right there. And it measures, let's just get it down, it measures to 2781, and the low today was 27. Hold on one second here, I'll get it here. Oh, wow, right on the money. 82 was the low, so misses it by, 3 cents. 3 cents basically, misses that low. Now, the next part of this is to look at the first rally back. See, you have the nice rally, then you have the little pullback. And this is important if you're short-term trading, of course, because if that pullback is stopped right at the 382, which it pretty much did. You can see it hit it twice, so that tells you that there's pretty good support in here. So, trading silver, you don't want to risk 50 cents on every trade, but you can risk 20 or 30 cents on looking for bottoms like this, and that would be something that could be pretty nicely. Because remember, you went up and made a higher high here, so you have to recalculate the 382 one more time, and as you can see, what it did is it came right back there, and it stayed there for an hour, folks. So there, if you get below that, you don't want to have anything to do with it. So your stop would be, just a penny away trading silver as opposed to risking 20 or 30 cents. That's what I try to do on Friday when the markets are willing, but, not all the time will they do that. And we have a winner of our lottery for today, and we have Mike from Florida. How are you doing, Mike?
Hey, Larry, I'm doing great. I got a question on the U.S. dollar index. And my question is, it looks like since July of last year, on a weekly chart, we've been making higher lows. And what's your opinion of the dollar index? Do you think we're going to gradually creep our way back up?
I don't see anything wrong with the dollar index. I've got it here on the weekly basis, and as you can see, we still have targets up there at 108, and we've had higher bottoms all through here. We haven't had higher tops, so we're in a really tight congestion range between 106, and par, but all of the bottoms have been higher, and that's good. And we made that beautiful 3 drive to a bottom pattern way back in July of 23. We're losing which decades here, pal, because there was your 3 drive to a bottom pattern right there. And this looks to me like we're headed higher. You've got higher bottoms all the way through here. You can see you have one objective here at 108. That's your big one, and that looks good. As long as you don't get below 102. If you get below 102, then that would tell us, there might be trouble in River City. But right now, this looks pretty good.
Okay. And Larry, thanks for all you do for us at TFNN. Great education. I love the guests you have. Shane Smolny is one of my favorites, and Stan Harley. So it's
thank you very much.
Great we have you to teach us all here.
I'll get that $20 out to you just as soon as I get the results of the third race at Aqueduct today. Okay, my friend?
Okay, and you can send that PayPal if you'd like.
Very good. I like it. Thanks a lot, Mike. Call in anytime, my friend.
Bye.
Okay. All right, since we were talking about the U.S. dollar, let's switch over and take a look at the euro since hold all the calls, folks. Poor Al is at the switchboard there. Just take it easy on the calls, okay? He said he might be able to get one other one before the time is over, but you just never know. Hold on. It's a busy day like today. Hold on 1 second here. Now, here is the euro, which is going to be the upside down version of that. You see, so this is the upside down. Let's clean this out. See, now this has the lower tops, okay? See the congestion phase that it's in? It's really, it looks like this is a downtrend line. That's basically what you're looking at. Now, this is the weekly. There's your weekly downtrend line. So it's still, you've got lower tops, higher bottoms. You're in that tight wedge, just like we were in the euro. That is a wedge because when you define it, whoopsie daisy, let's get this up here, right out of Andrew Lowe's book. There's just connect those trend lines. And if you do it Fibonacci way, you want to make sure that this is a 78% level. There's a 78% level. We could draw that one real in, very easy. There's your ABCD right there, almost exactly. Well, off by a little bit, but there's your ABCD right at your 786. So wherever we come out of here, that's where I've got see this little beeper that I got on there? That's going to tell me that thing's breaking out and I need to pay attention to it. All we've done now in the past weeks, let's just go to the daily, and you'll see all we've done here is had a nice run up. We missed the target by quite a bit. But the first pullback that we're looking at right here, let's just get this up here, get it out of the way. There's my data still missing. Sorry, folks. Let me have to refresh this for a second. Yeah, there's our first pullback is today, and let's see how close it came to the 382. Right on the money. So it hit right on the money of the 382. It's moved a little bit. Actually, not too bad. It's moved about 50 pips. Looking at this on a little smaller time frame. Moved no. 40 moved about 20 pips. So not really anything happening here with the euro. The key here, folks, is this 109 level, which is right above here. That's that long-term weekly number. Get that back. We get above here, say 110. We'll call it 110. That's a 109.80. We call that 110. Then the bells are whistles saying, hey, U.S. dollar's in trouble, i.e., look out for treasury bonds and strap your seatbelts because gold could be on the way for a big run. Speaking of gold, let's get back here. Silver's starting to move just a tiny bit right now. Let's see if we could find that same pattern in the gold that we were looking at here. Let me get up. That was a very small pattern. It was a 30-minute. So we're going to find out if we see that same pattern in gold this morning. And we'll roll it. Hopefully I'll be able to blow it up. Just 1 second here. Get it out of the way. Got to move it over. Nope, you don't have it. You don't see with silver, you made 3 drives to a bottom. You made drive 1, drive 2, drive 3. You did not do that with the gold. The gold held that number. And what did it lead to? Anybody? I see the number. Oh, golly. Hold your horses, Johnny. There's your ABCD pattern right up in here. At the high was 24.14. It measures to 24.10. Then it backs off. And here again, there's that same back off like we were looking in the silver. And I'll bet you that was right at the old 382. And this is a 30-minute chart, so it stayed there within an hour and a half of that 24.02. The low was 24.01, and now we're starting to move to the upside. And that's why you're looking at that bullish pattern that you see right in here. So that's mainly what we're watching here in the gold market. I believe, let's check with the old clock on the wall over here, how much time we have left. And we have 52 seconds, which would be quite a bit. I think all these other things I've covered. Let me get back in here to the program. Rich Anderson will be our guest here at the break, and then we'll be talking about wheat and some of the other things that we're watching here today. Wheat, corn, and soybeans. We'll have charts up for those. You guys can decide whether direction you might want to go with it, okay? So let's just be careful here and stay tuned. Rich Anderson coming up, 877-927-6648.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're with Rich Anderson of Anderson Capital Management on the line today. Rich, how are you doing?
Doing good, Larry. Good morning.
Good morning to you, sir. We've had a 50-cent rally here in soybeans. I guess it's weather-related. Is that correct?
It's all based on the forecast that there's going to be a heat dome start to develop out there in the 10 to 15-day weather forecast, which, 10 to 15 days out, subject to change at any time. But, I understand it got a little hot out there in the West the last 2-3 weeks, and eventually the weather in the West moves towards the East. And, had this happened in July, it'd be a big deal to corn because corn develops in July. But this isn't going to happen until August, and that's when you fill the pods with beans. So it could have an impact on beans. And as everybody knows, the commercials, the managed money, our funds are big shorts, right?
Oh, yes.
But who's a record long on the other side of that trade? The commercials.
Well, they're usually right most of the time anyway. Rich, explain to the folks here.
They made some money over the years doing that.
Yeah, they sure have. Explain to the folks why farmers don't lose money, because when they put a crop in, they go to the bank and hedge the crop, don't they?
Well, it depends on, if you don't need to go to the bank, then the bank doesn't have anything to say. But if you need to go to the bank kind of has something to say. But more important than that, you have crop insurance, and the crop insurance comes with revenue insurance.
Yeah.
So they have a downside, and that's why the biggest bearish component right now is the amount of corn on site on the farm still that hasn't been sold. But they don't need to sell it necessarily because they're guaranteed a certain price by the government and a certain amount of revenue. It's a price or revenue kind of a insurance product. But it's not like the old days where, you better hope you got a crop or you can go broke. These days you got insurance, and if there's a train wreck, insurance covers a lot of it. You're not going to necessarily make any money from the insurance, but you're not going to go broke. And a lot of the, I shouldn't say a lot, but a portion of the premium is subsidized by the government.
Yeah, all the years.
But then the government subsidizes a lot of insurance. Think of all the big houses on the East Coast that get affected by hurricanes every, 3 to 5 years. That's just one of the things that happens, in our economy. So
that's for sure. We've been working together for 6 decades, Rich, and I've never been in during a crop season where you don't have at least 1 or 2 crop scares. But this might be the year we don't have any crop scares. It certainly looks like there's that possibility.
This year is tracking a lot like 2014. In 2014 was another year where, we just didn't get any concern because we didn't have the hot in July, and the corn sold off bottom in October that year, and then proceeded to rally 20+%. But it went sideways during July and then drifted lower into the harvest. Like right now we're just finishing up the harvest of wheat.
Yeah.
And, of course, you make your lows typically during harvest because that's when the most excess wheat gets sold, what the farmers don't sell. But as you look further north into North Dakota, Montana, and up into Canada, the spring wheat crop, that weather could have a very negative effect on it. And then we have the same thing, kind of weather problems developing in the wheat area in the Black Sea. And then over in Europe, we're getting some rain and stuff, and the quality, they're saying it may even be more than feed wheat. So I think they're going to start to see interest in the wheat market, but a lot of it also depends on the price of the dollar. The dollar's gained some strength recently versus the Brazilian real, which makes their soybeans a little cheaper. But then the other thing that's interesting is the freight rates. Container prices have been going up as people are booking ahead in anticipation that if Trump were to win, there might be all these tariffs, and so we need to get this stuff sold or bought beforehand. And that's in 2022, freight rates were hugely expensive because of COVID. This is a slightly different deal and probably a shorter term deal, but nevertheless, will probably keep inflation relatively sticky for this country and several others, and affect where the cheapest place is to buy if you're a grain buyer too.
Okay. Well, I put a chart up here of Christmas corn, and it's gone from 580 down to 395, which is a pretty big break. We've had a 20-cent rally here, which poked its head for the first time in 10 weeks, where it actually took out the high the previous week. So that may mean that we've had some type of a bottom forming here in some of these grains. But boy, they've certainly been beaten up. Like you said, 2014. Was the last time that we had something going on like that. Rich, what about the relationship between that soybean oil and the crude oil on the Greenpeace thing? Could you explain to the folks what that means? I didn't realize they use soybean oil as a fuel. Is that correct?
Yes, and the soybean oil, sustainable aviation fuel, SAF, sustainable aviation fuel. We've got two more. We've got one plant going on right now. We've got two more plants coming online, and the idea behind it is that, and they're obviously again being subsidized by the government, that would do for soybeans what ethanol did for corn, right? Increase demands consequentially. Plus, there's another two plants that are being built, so the 1,400% increase coming online, plus two more plants would take a ton of soybeans. But what's been going on, the only plant is using Brazilian sugar right now in the United States. And I personally don't think the government should be subsidizing SAF when it's made from offshore products like Brazilian sugar, or up until recently, when we got in a little tip with China, they were using used cooking oil. But eventually, that will be a big component for the soybean oil and will be the thing that will help lead the beans, and I'm talking over the next several years here. I think it could be huge, provided we don't decide that we do not need to use cooking oil from China instead of soybeans. Soybean oil. If we didn't use any of that cooking oil and we're just using soybean oil, I think we'd be talking 50% oil. Soybean oil.
All right. Hey, listen, thanks for joining us, Rich. We'll have you on again soon, my friend. Stay warm over there. You got the 4th of July, or 4th of July is over now. Your summertime's over, almost fall for you.
Yeah, next big report is August 12th.
All right. Thanks, Rich. Rich Anderson, folks. Anderson Capital Management. Stay with us. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I want to focus on the Russell. That's the second most active of the 4 stock indices. The first is the S&P, second is Russell, third is the NASDAQ, and fourth is the Dow Jones. Now, you'll notice here we made the 78% retracement on the weekly, and we sold off over 100 handles, folks. 100 handles. We came all the way down. You can see we went from 2085 all the way down here to this low right here. Okay, but here's what's important. That was on July 22nd, just a few days ago, like maybe yesterday. And look what's happened today, just to show you what we talked about once before. Watch for this ratio right here, folks, because when you see that little puppy sit there for well over an hour and it doesn't go down, that's telling you that is flat out strength. So just keep that in mind, because when you use that in your little quiver of things you want to use for trading, it's a really good one for really strong trending markets. In my opinion, of course. Okay, now let's get that one out of the way. We have a question about Apple that we looked at yesterday. I think we should start the show every day with Apple, because there's several people in TFNN here in the family that must have a lot of shares of it. Now here is the, let's just do it with a 15-minute here. We looked at it yesterday. Oh dear, this is moving out of the way here. Yesterday let me get rid of that. Let me get rid of that thing that doesn't count, because I'm not looking at the ratios. I'm just looking. There was the ABC that we had right there at the 382. Let's just get it up here. There was our high way back here. This is one we talked about yesterday. Had some, in fact, it still did pretty good. There's your ABCD, came in right there. 227, it came down $4. Made a lower low. And so if you're in that trade, I mean, I don't see any reason. Just keep your stop at the break-even point. I don't trade stocks, but they trade very nicely. In fact, this trades very nicely too. You can see here, now remember the gaps that you see here, folks. Let's get that out of the way. The gaps that you see in here is overnight trading. See, I don't use overnight trading with these things. That's only the daily trading that you're seeing in here. So that's why there's a gap in there. The prices will be there, but that gap won't. So anyway, let's watch to see that last high that we made back in here. You see we didn't quite make the 382. That would have given you the ABCD down to this level right here, so it hasn't even got to that level yet. Now we've been here for, look, 1, 2, 3, 4 days, and we haven't been able to do anything except make a 382 off of the high that was made yesterday. There it is, right there on the money. There it is right there. So that's telling you you're still in a downtrend in Apple. That's what it looks like. So I'm just giving you my 2 cents worth. Okay, now let's take a look at one other stock, and that is Archer Daniels Midland. We haven't looked at that thing since Hector was a pup, and that dog's pretty old now. ADM, boy, even taking it off the book here. Hold on just a second here. I'll get it right up here, and we'll get it right up here. Hold on one second. Boy, my frustration index with these things is pretty tough. ADM. I can't get any data, folks. I mean, well, I got the data, but I can't send anything out. Google has blocked me from sending anything out. Here's the ADM. It's done nothing, folks. I mean, look at this thing. It's gone sideways for 6 months. Had from 54, wow, a $6 range. Boy, there's nothing going on there. You got a couple small ABCDs in here, but the bias, I would have to say, is to the upside because you do have higher bottoms, but you also have lower tops. So again, what you're looking at is one of those wedges. Then we become pretty close to taking it out, but not quite. And then you have it on the downside too. So not much to do here. I'd find one that even for day trading, this is nothing because there's not enough range. When you're day trading, you want to have something that's got a range. Like Apple's trading at 125 or something. Yeah, it's going to have a pretty good range. $61 stock. Looking at this on an 8-minute chart, it's what they actually on an 8-minute doesn't actually do pretty good today. Let's see where that ABCD ended today. That tells you how much I see ADM. There's ABCD, and well, by golly, there it is, 63 to 62. Okay, now let's move over here and take a look at one other person. That is this Tesla again. I think it must be the most widely held in the world. Well, actually, it's actually having a down day today. So we're going to look at this on an hourly basis. Let's do 13-minute. Give me a better idea. There was our action yesterday, okay? And we saw this ABCD to the downside last week. That was part of this big move that we had right there, measured right down to there, your 238. From 238, it went up to, had $20 in it, 256. At that level, it came right up to this level right here, which was shut the front door and raise the rent. There's your 61% retracement, and now we're just in a holding pattern here. Probably trying to fill this gap would be my guess, but nothing really else to do here with that. Now let's take a look at Treasury bonds. We haven't looked at those for a day or two, but we're still very bearish, the bonds. Let's get these prices up so we can see them easy enough. And here is the Treasury bond. Okay, that's the daily. It's actually moving lower, much like we had thought. But let's get up the Treasury notes also because we want to show you the difference between those. There's a big difference between the two, and they're both coming down a little bit. So let's look at the notes first, okay? Now, taking the last low that we had right back here, we've had a pretty good run up. So you'd want to be watching for the first 382 retracement to come down on this, okay? And that comes in right here at 1017. That's down about a half a handle, equivalent to about a dollar in the bond market. Now remember this higher high. We made a higher high in June in Treasury bonds, which is 1/6 of the volume in open interest. It didn't take that out. That tells you that this is the weaker of the two. So we want to be watching to see what that 382 would be on this one too. And if you mark it up like this, there it is right there. It's already hit the 382. Okay, so that's basically telling you that if it gets much below this 119 level, we are heading down. Now remember, the notes have not reached that 382, but the bonds did. So let's go down to an hourly chart and see if there's an ABCD staring us into place. There's our action here. Don't really see too much. I think it's down a lot more. Well, let's just do it the easy way because I know you guys love to see ABCDs. There's ABCD right there. I'm assuming that that's this one right here. Then the one right behind it would be a much smaller one. That's that one right there. And then we have the really big one that's I'd be watching. That's this one right here. Because when you get to that one, you're going to have something else to put your hat on, and that is this old hat rack right here, and that would give you, guess what? Yes, Johnny, you are correct. It is a 3 drive to a bottom pattern. We're going to draw that in right here. And this is a commercial for the show on Friday. Anyway, there it is. Drive 1, drive 2, drive 3 on an hourly chart. That comes to 108. That's down a handle from where we are right now. That's like a move like this. So that'll be a good one to watch here the next few days. Of course, this is Tuesday. Tomorrow we have Mike Moore as our guest. Thursday we have
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I wanted to bring up a daily intraday chart here on crude oil. You can see we made a high here, 78.70. We came down, rallied up to the 382. We've got another 382 staring us in the face right here. Now, I don't know if it's going to work or not, but let's just clean this out, because there's your ABCD pattern. Take your high that you had back here. That was a good high. Market rallied $1 a barrel into that high. Hold on one second. There it is right there. There's your A leg right there. There's your BCD leg right there. There's your 382 up here at 77.30. We're at 76.95. So it gets to that level. it would be a valid 382 pattern. Your risk on that would be 50 points or $500, 250 if you do the E-mini, but that's what you'd be watching here because it is a downtrend. Under any stretch of the imagination, you can see we hit the let's do the 4 hours so we can see it so clearly. There was the 3. Remember, we had this nice bounce right here. That was $1. That was $1 a barrel rally for a little more than $1. And look what happened when it came through it. When it went through 77.39. Just looking at that on the 13 minutes. Watch 77.39, folks. That was right. 77.39 was right in here. Look, there's 77.39. Look what happened when you went through that 618, folks. Boom. They hit it really hard. So keep that one in mind for today. It's got a chance. It still does. We got several hours of trading to get through, but it certainly could do that without any trading at all. So also remember to try to do something nice for your neighbors, folks. Live every day in an attitude of gratitude, and may God bless. And I hope I'm on target. Oh, I've got 44 seconds. I don't want to lose it. So one other thing we want to watch is the wheat. Let's get the Christmas wheat up here. See how it's doing. It's still moving to the downside a little bit. That was a nice little pattern up here. So these are the kind we'll be looking at for Friday. We go back. Well, that's it. The bell is rung. We'll see you on the flip side tomorrow. So may God bless.